Seconds of trading. My name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com. I'm going to provide you guys with a quick update on the markets. But before we do that, as always, I need to stress that trading financial markets, unfortunately, is risky, and there's a general risk that we'll lose all of our invested money. Okay, let's just get going here, and let's take a look at the markets. If you're new to this is something we do here Monday to Friday here in the live trading room at I was gonna say something different, but I mean TradeCaptain.com. Okay, let's begin, and we're gonna begin with the euro dollar. So this is the euro, and the overall market is bullish, but we're relatively close to the high. 113 pips from the high and about 153 pips from the closest low. So because of that, traders won't necessarily be going long up here unless they're forced to go long, or unless they're a little bit silly. So this could easily go down and easily go up. And from a trading perspective, tactically, the only level it respects is 121.55, which is down here. So if it goes down, I think it could make sense to potentially look to buy. Not that that's something I'm gonna do myself, because we're dealing with a range-bound market, and I don't like range-bound markets. But I do know that some people, if it goes down to the low, they're gonna be buying here. Stops goes below, and then they're gonna look for that little push to the upside, as they did here, here, and here. Now sometimes, yes, I'm gonna show you the short-term levels, and I'll do that in the beginning, so when we are in sort of a trend and it looks like we're just gonna head to the upside, but when it's clear that the market is trending sideways the way it's doing right now, then it's better to take a step back and ignore that market. The next market here is Bitcoin versus the dollar, and Bitcoin moved down a little bit today, 1.6%. But you can see that in the grand schemes of things, it's a minuscule move, and the market remains sideways and could easily slip lower. Take out the low here, and the market is probably going to attack the February low. All right. Same time, take out this high here, which is the 7,546 level. Then this market could start to trade to the upside. Now, what's really interesting, if you have been paying attention to the other crypto coins, then you had some nice moves in Neo, Ethereum, which is the second biggest coin. So again, Neo, I don't know exactly which level it is, maybe in the top 10, top 15. But you got Neo moving up, Ethereum moving up, you have ADA, Cardano that is, moving up, and EOS yesterday moved up, and I think that's number 8 or something like that. So you're starting to see people looking to buy, particularly altcoins, and in Bitcoin itself, things are stabilizing, and I think it makes sense to start to potentially look to turn bullish. But again, technically in this specific coin, we need to take out this level here, or as a minimum 7,196. So if we take out this level, and you see that more of the top 10, top 15 coins start to break to the upside, then potentially that's going to hint about a low. And this is really the first time I've been bullish since the market traded below this level. You might remember we're bullish on the break here and then here, but I turned bearish here, and from that level all the way down, the market is now down with about 36%. And even though a lot of the a lot of people on YouTube that have get 15-20,000 views per day. So obviously, because these guys always say buy, buy, and buy, and last year everything went up, right? So you didn't have to be an expert, you just buy anything. And in fact, there is some report that the average ICO was up with 13.5% of the ICOs they were able to record. But the same people here, keep on buying and buying and buying, and that's fine. If you want to do this long-term investment and also deal with the big drawdowns that are part of a long-term strategy. But I personally think that it's possible to optimize that in a better way. and that is why I use technical analysis. And here we saved a nice good 36% decline. And in December, personally, I made about 200% on cryptos, a little bit more than that, and I kept about 80% of those returns. And it's first now I'm starting to get a bit excited about going long again, following turning bearish here. So things are starting to look interesting. Again, keep an eye on all the other coins. If those starts to move to the upside, I mean some of them are starting to move to the upside, then most likely more and more coins are going to start to turn bullish. And I'm not sure if Bitcoin is going to lead, but right now it's definitely not leading. But it's definitely not the last either, because there's about 4 coins that ended the downtrend. The other ones are still bearish. Here's West Texas crude oil. And the market, you know, we talked about buying here at 6,062.70 and book profits up here. The market continued to move to the upside, and yesterday on finance Twitter and on other places as well, everybody got super excited. Why did everybody get excited? Well, because when you take out a high like this one, it's most likely that the market is going to continue to trade to the upside. And I did a special piece on Brent crude, which is well, it's crude traded in Nordic Sea, and you can see here as well, this is a daily chart of Brent crude. You know, take out the high, which was the 2018 high, and the market could potentially reach 76.86, 81.52, and 88.13, which is really the 2012 low, and that's really sort of the big level that I think could stop the price from gaining. So here, you know, we move to the upside, probably gonna head a little bit higher, but eventually, and at least for me, I want to see a pullback before getting excited enough to buy it. But what's also interesting is that you're having this strong rise, and when you have a strong rise like this one, you're bound to have higher inflation eventually. So that's gonna potentially cause, say, central banks like the US and also Bank of England and potentially even the EU to look to continue to increase interest rates. Obviously, in the case of the EU, they would take the interest rates from being negative to being less negative. So we're having that sort of effect, and that as well is causing gold to soar, and that's something as well we're going to look at in a minute or two. Now, if you want to trade West Texas specifically, then I just need to look at the bigger picture to give you some sort of targets. So you have a low over here, which is this is the 2011 low, and then you have another level up here, which is the, well, what is this? Yeah, it looks like a low here from November 2012. So those are some levels to watch. In the short term, we need to go back to 2014. So here you have a high. This is from 2000 November 2014 November 18. November 28th actually. And then, like, is there anything else here that is really relevant? Okay, so price is pretty much it. No, it's not. So this is pretty much it. There are some other lows here as well, like this level here, which is another low from November 14th 2014. Okay, so what's the game plan? Took out the high, most likely going to push a little bit higher, but I think here we need to be, it doesn't have to be that we need to be very tactical here, but or very sort of careful, because this is a market that when it takes out a high, it usually just continues. It doesn't always have to correct, but when it does correct, it corrects quite a bit. So I would prefer, ideally, for the market to correct a little bit more than 31.8%, and maybe a level between the first fib and the 50% correction level. That specific level is the 65 level, and then for the market to potentially go like that. But it could be though that, you know, it's not going to come back, then it just shoots to the upside. Here's the price of gold. Now gold, I think it tricked a few people yesterday to cut the high, but most likely we'll try to test that again, and I would like to get involved, but I think it makes sense to wait for that break to the upside. Now, I didn't buy this yesterday. I did get some questions from people like, is it time to buy? But I didn't see it as really interesting, because the market had rallied so much and without really any strong corrections. Now, I think if you really are bullish on gold, you know, maybe one could, you know, just put a Fibonacci like this and potentially look for this to head to the upside from, say, 50% correction, maybe a 61.8, but we're still going to be stuck in the trend. And we need to remember here, what we're doing is that we're selling dollars and we're buying gold. But you could technically sell dollars in other setups. You know, you could do it via crude. You know, if you buy crude, you're selling dollars. And in crude, we took out the high. So we just need to be clever about it, and you know, we shouldn't obsess about buying gold, because it's not people buying gold as much as it is people selling dollars. People are selling dollars against gold, against crude, against the pound, against the New Zealand dollar, against the Canadian dollar, and a little bit against the Australian dollar, and a little bit against the euro. The Australian dollar and the euro dollar trading sideways, but New Zealand dollar USD is trading up higher, in line with the technical setup I shared with you guys here as well, and that's working out awesomely. And then the CAD, you know, that's amazing. You know, we said sell here for us to go down. It touched the first profit target, and I kept my position because I suspect we can go down to 125, so I'm gonna net a nice 300 pip here. So it's just about being clever and, you know, selling dollars in the right pair. And here, because we have not taken out the high, I don't really think it does too much sense to work with it, because, you know, we're probably gonna continue to trade sideways for longer. Now here's the German DAX, and the German DAX took out my key level, so I was no longer bearish. But then, you know, sometimes it's always good to just give it a day or two to, you know, come back to the market, have a good night rest, a few espressos, a few coffees, and then look at the markets again. And then I said, all right, okay, so we took out the short-term downtrend, so it's no point being bearish any longer. But when I look at it now, I can see that there was also not a good buy opportunity. Ideally, your stop loss is where people, your stop loss is where the other guy wants to buy. And you know, you put a good stop loss if the price take out your stop loss, and then the market continues to go in the direction, continues to go against the direction you intended to. In other words, I should have put my stop loss here, not here. Why? Because at the end of the day, the market moved up. But if I was short, you know, I would still be in position here, because and this market could technically still continue to go to the downside. So remember that a good stop loss level is a good buy level. If you're short, that is. If you're long, then it's the other way around. So the level I'm watching and now is 12,460. All right, break to the upside can take the market up higher and then potentially lower. Now, what's interesting here is that I'm not sure exactly how the market is going to react, but there's talks of potentially the US and the French introducing some military action in Syria because of the latest scandal with the chemical attack. I think hurt about 60 people or something like that, and the use of chemical weapons in Syria. And obviously the Russians have said, wow, to protect Syria against any missile strikes, and to potentially also attack the positions and locations from where these missiles are coming from. In other words, we could potentially have the Russians sending missiles against US warships and planes and submarines. Not that I think that that's going to happen, but things are escalating quickly, and I personally think it's just rhetorics, the same way as Donald Trump said he would unleash like fury and hell on North Korea. I think it's something similar here, and as well the Russians, their economy is very, very fragile in general, very much dependent on crude oil exports and gas exports and things like that. So while they have modernized their army, they're not necessarily in a position to actually get in. They can get in small military confrontations, but they wouldn't necessarily. I think we're not going to have World War III. But we'll have some sort of action, I suspect, and that is, I think, causing traders to stay at bay. They don't really want to get involved right now. Maybe we'll have a diplomatic solution, I'm not really sure, but be mindful with that. I don't think, though, the market is going to be gapping and trade 10% slower when we open on Monday, but a lot of things can happen over a weekend. So you need to bear that in mind and be nimble with positioning. And that's it. So break to the upside, I think can go up, but I think again people are at bay because of the political situation in the Middle East. We'll see how that plays out. And that's it. So one is stuck in a gold, two in a false breakout. Yeah, I think yeah, sometimes like that. Like I bought the Nasdaq 100 yesterday, and as well I was stuck in a false move. I bought here, and then the market moved down. But I actually closed out the position this morning. I'm gonna potentially get involved again if we take out the high. But yeah, fortunately it's just part. Now what you can do many times. How do you know if you should get involved in a breakout or not? Well, if the breakout is happening at 4 o'clock, 3 o'clock, sorry, 4 o'clock, really anything after 3 p.m. London time tends to be a false move. So anything after 3 p.m. London time tends to be a false move. So be very, very careful with breakouts that happen in the at the end of the day. And then the last thing as well is that you want to see here, you see there's no correction here, right? It just went straight up 2.5%, and every time you buy and you think, okay, so where am I going to put my stop loss? So I think that was the issue here. People said, okay, it's the end of the day, probably that's the last sort of energy, sort of a lot of that the buyers get amount, and then most likely you have some sort of a pullback. Sometimes, of course, you're gonna get you're gonna lose out, and there's no right or wrong. There's some people that trade on the daily and they don't care. You have a breakout on the daily, they go long and then they put the stop loss on the other side of the range, maybe 4% or whatever it could be, and then they just stick to it. And I think the trick here is to not get you stick with your system. Don't try to change too much. So in other words, you plan your entry, you plan your stop, and then you stick to it. And sometimes you can make some exceptions, like in the NAS 100. The reason why I actually took that loss here on the Nasdaq is just because I'm already long the Dow, and because I'm long the Dow, my plan, because I thought it was going to break to the upside, so my plan was, all right, I'll use whatever I have in the Dow to neutralize any potential losses in the Nasdaq 100, but I didn't really have too much profit in the Dow to begin with. So yesterday when I looked at the market, I said I didn't want to break out. I closed off the position, and then this morning I looked at the market again and I said, okay, it's not really going to move to the upside. I'll close the rest in the Nasdaq 100, but I'm still long in the Dow. And yeah. Okay guys, we're gonna wrap things up. I want to thank you so much for watching. Now don't forget to click here and then you click on like. Very straightforward. As I mentioned to you guys yesterday, there's one guy one guy only from a country, because you can see from where you get all the likes and dislikes in the world, and all of the dislikes are literally coming from one country. So someone that loves me a lot. Click on the like button, please, to neutralize some of the dislikes he's done over the last few months. Had a question here as well from Antonio. I had a few trades long oil from 62, 64 and Nasdaq from recent lows. Closed them yesterday on the break as I experienced too many false breakers and come down. Yeah, you know, sometimes it makes sense. The market really goes, it comes and goes in waves. Like there's a certain situation where all the markets are just trading sideways, right? And you know, gold is a good example of that. It's been trading sideways for a long time, but here's the euro, where the market traded sideways from 2015, right? And then you know, over here you don't. I mean, it's hard to know because this 2014 to 2015, like any sort of breakout, you just sell and you make money. It's the same with Bitcoin. You just buy. Doesn't matter if you don't know absolutely nothing about technical analysis or nothing. You just buy and you make money. And then eventually, after such a move, you will have a consolidation. At the same time, after consolidation, you can have a strong move. So and it's difficult to know exactly, are we here or are we in this mode. So what you need to do sometimes is just try things out. Try a breakout, it doesn't work. Try another breakout, doesn't work. And then if you actually say wait a week or two, try another breakout and it still doesn't work, then you're probably stuck in a sideways range. Another way of knowing if you're stuck in a sideways range is that if you are long, trying to make money on being long, and you get stopped out, and then you go short and you try to make money on being short, and that doesn't work out, well, again, you're trading sideways. So as long as we're aware of these sort of situations, then you know, when we're trading sideways, then yeah, you know, go for smaller profits. But then again, when you have a breakout, it goes really forcefully, and really the market not turning back. As an example, here is a weekly chart of gold, and I think if we take out, you know, these highs, 1,365 and 1,376, if we take out these levels, then most likely, because this market is straight sideways and was prone to false breakouts, we're probably going to have a decent trend. And this market could potentially, relatively easy, go to 1530, maybe all the way up to 1,700, especially if we get, you know, escalation, war, inflation, things like that. And I think if this happens, there's not going to be too many people waiting for a pullback. They're going to go long, and if you start to trade on the daily, it's going to be more difficult. It could easily turn into something like this, you know, where it's bullish, 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 sideways, and then bullish. And technically, oil is a little bit in that sort of condition as well here. Okay, guys, have a good day today. Don't forget to click on the likes as well. If you want to, you can comment. That's fine. I want to thank you so much for joining. And if anybody wants to join in the chat tomorrow morning at 9 o'clock London time, then just sign up to YouTube. You need to have a live account. Not a live account, sorry. A free account with YouTube that allows you to subscribe, as you can do here, and also allows you to get notifications. So you'll get notifications. Actually, that's not correct. Here you go. These are notifications that I have on my personal account. So check it out. Have a good day, guys. Thanks so much for watching, and thanks so much for your support. Don't forget to smash that like button like that. Awesome. Thank you. Have a good day.